Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's video I'd like to look at a lovely trade that's just unfolded on a 5-minute chart of the euro. This is the euro against the US dollar. You can see we have a lovely TS1 sell here. It was a standard trade setup. If we look at how the standard traders would have viewed this first, if I go back to when it unfolded, which was there, you can see that the TS1 sell came on a black STF, therefore both traders could take both long and short trades. So if we put the analysis on, you can see that instantly it gave you a potential sell setup here on the black STF, which is okay, telling you to short 44 lots. Here I'm using a standard pip size of $1 per pip, and gives you the entry level and the stop level. We also have the initial target here at a potential plus 2.3R profit. So let's see how this unfolds, but so far it's a completely standard and automatic MTPredictor trade setup. As you can see now, the trade has been filled, the market wiggles around a bit, wiggles around a bit, wiggles around a bit, now gets to our first target. But now what we do is we now go back to the STF and look at what we call the strength band. The strength band are these two grey lines you can see. Now what these do is determine whether a market is strong or weak. In other words, whether if it's weak, in other words, if this oscillator is less than the strength band, we assume the market is going sideways, therefore we come out at our initial target. However, in this example, the STF, as you can see here, is beyond the strength band, therefore we assume the market is going to trend further, therefore we use our ATR stop to look to manage the trade as it goes with us. And as you can see, that's indeed what happens. The market carries on down, carries on down, carries on down. I'll come to this WPT target in a minute for the advanced traders, but I just want to show you that this is the ATR stop coming down here. You can see it's trending down, trending down. Market goes up a bit, and actually would have stopped you out just at this level here. So let's now place the risk reward on and see what the result would have been for the standard traders among you. So it would have been stopped out just at that high there, just to the tick there. But the result was a lovely plus 5.4R profit. In other words, it took the initial risk of just under $400 in this case and turned it into a potential profit of just over $2,000. Now this was a very good result because I read an interesting article the other day from the FXCM traders. In fact, actually, if I now bring our blog into view, I just want to, our forum into view, I just want to show you this on the forum. If I bring this into view here, if I come down to the forum, and I've got a link here, why Forex traders lose money. There's a very interesting article here from FXCM. If I go to that, it highlights basically on the average trades throughout all last year on all their Forex traders. And it's quite interesting reading because basically overall, if you take their trade as a whole for the whole year, they actually lost money. And the reason they lost money was because their average profit, if I can see this, the average profit, you can see which is the blue lines here on each of these markets, was a lot less than the average loss. In fact, you can see on average their loss, for example here, their loss was $127 on the euro US dollar, and their profit was only $65. So every $65 they won, they lost $127. Now that's completely the wrong way round. I mean, why on earth do you want to try and do a trading system where you have small profits and big losses? Now please remember, this is taken from the average of all their traders throughout all their trades throughout the whole of last year. That's 2010. So overall, their traders lost, their customers lost money, and this is the reason, because they don't understand position sizing and risk reward. So let's compare that to the trade that we've just seen on MTPredictor. Remember, on average, these guys, they had small profits and big losses. Now compare that to this trade here, where we had a small initial risk, so that means when the trade goes wrong it actually loses small, and the profit was big. in this case the profit was 5.4 times greater than the initial loss. So that means MTPredictor turns that equation totally on the head. In other words, we look for trades where the initial risks or losses are kept small and the profits are large. So the exact opposite to what all the FXCM customers were doing last year. Now this is not a surprise to me, because in the last 10 years of having the MTPredictor software program and developing it, this is what 95% to 97% of traders do. They get this balance wrong. No matter what market, what time frame, they tend to take small profits and have big losses. So that's why 95 to 97% of traders lose money. This is why the MTPredictor software program is designed the other way around, and it's geared to what professional traders do. In other words, we have small losses and big profits. This is the key to successful trading, and is why it's at the fundamental core of MTPredictor. So I just want you to understand that to be successful in the market, you must have a trading system that has large profits and small losses, and that's exactly what the MTPredictor software program is designed to do. As the second part of this video, I'd like to take a look to see if the advanced traders among you could have squeezed out a little bit extra profit. So far, the standard traders among you have seen that this would have resulted on a nice plus 5.4R profit. So if I clear the chart and I go back a bit, I first want to zoom back a bit and actually put the decision point on from the last swing down into this low. This is what we do and we teach. So for here, I'll just do a decision point from here, and this gives us a resistance area that's on the chart in advance. Nice TS3 buy setup there, by the way. But the market goes up, it goes up, and actually hits that level very nicely. I'd then look for a potential target of the DP from this low here. So in the back of my mind, I'll be thinking, well, yes, the market would be beautiful or be ideal if we go from around this level down to here, down to this level, or just over the 130.14 level. So far the market hasn't, so when we come up and get our TS1 sell, again I'll put the analysis on, I can think that the market's going to go beyond the first target, and I'm looking for the second target. As we've already seen in the first part of the video, that's exactly what happened. It got to this area here and the STF was strong, therefore you could trail the stop using the ATR stop. That's the standard trade management guidelines. But what I also want to show you is that for the advanced traders among you, we can actually have these targets on these charts. They're on there in advance. So here you can see that this typical wave 3 WPT is an area where the market hasn't got to yet. So why would I be interested in this? Well, this looks like a major high because it reversed at a decision point resistance. The initial decline of that high would be considered a wave 1. The initial correction into our TS1 sell setup would be considered a wave 2. Therefore, after wave 2, we would then anticipate a strong wave 3 type decline. So what you can do now is actually put the risk reward on your chart at this level in advance. So that would be approximately plus 6.9. In fact, I probably missed that ever so slightly. It would probably be nearer, yeah, about plus 6.9R. So as you can see, this is on the chart in advance before the market gets there. So you can have orders sitting there ready to come out if the market gets there. If we go forward, we can see that this indeed is what happens. The market actually comes down and actually hits this typical wave 3 WPT. And if I scroll forward, you can see that where the standard traders would have come out, which was just about here, was at a slightly smaller profit. It was plus 5.4R profit using the ATR stop. So the advanced traders among you could have used the typical wave 3 WPT to then have a slightly larger profit, in this case a plus 6.9R. Again, remember that our risk units are profits in terms of initial risk, so plus 6.9R means that the $2,700 profit was approximately 6.9 greater, or 6.9 times greater than the initial risk. So that's again a good example of having a trade where the profit is large in relation to the small initial risk. In fact, this trade setup is what I call my holy grail trade setup, and it's one that I look for a lot, where we're looking to catch a wave 2, which is the initial correction after the initial move after an important high or low, we then aim for the typical wave 3 WPT. And as you can see in this example, it would allow the advanced traders among you to squeeze out a few more R profit than the standard traders among you. But either way, whether you are an advanced trader and would have had a plus 6.9 R profit, or whether you're a standard trader and would have come out around about here for plus 5.4 R, either way it was a very good trade, and a very good trade because the profit was large in relation to the initial risk. And that's what the key is to successful trading: small losses and big profits. That is the key and the fundamental part of the MTPredictor software program.